All right, you guys should already be familiar with the concept of liquidity. We discussed it in the previous module, but just a quick refresh on liquidity. Looking at the diagram here, big previous areas, significant highs and lows, double tops and double bottoms, create these areas of liquidity. This is because any trader that's been short the market, for instance, at this level, would have their stop loss orders over here. So if they sold the market over here, they would have buy stops over here, which means if the market gets back to this area, those buy stops will trigger and the market maker will be able to sell to these traders that are buying up here to potentially move the market in the other direction. So we're going to be looking at these areas, and if you have a bias and you're looking for areas for the market to turn around, liquidity is definitely going to be one of those things you have to keep in the back of your mind when looking for trade opportunities. So yes, let's quickly have a look at how we can use this in identifying potential action zones. All right, on the chart, on the screen here, we got the Aussie dollar US dollar 4-hour chart. This is one that we did discuss in the previous module, and we're quickly going to have a look at how the concept of liquidity could have helped you identify potential action zones here. Now, we did have this big market consolidation, and then we had the rundown, and then the big move up, the impulse move up. And from a bias point of view, we had the structure break, we had the liquidity run at the bottom here, and now our bias would be bullish and we would be looking for long trades. Just looking at this chart here, if you're looking for long trades, you have to start thinking of liquidity and where the market will go. Like I said, the market has to refuel, and the whole point of corrections is so the market can refuel for a move in the same direction. And if we bias on this market and you need to mark off the liquidity for a potential action zone, what we do is we would mark this low over here, and this would be a potential action zone where the market could be turning around. Just moving to the next slide. As you guys can see, once the market takes the liquidity, we mark it with a check sign, and this means that the market now does have the fuel to go to the upside. And if you move a slide forward, you'll see this was that 3 drive before the market came down. In this little area after it took liquidity, there was a little bit of an ABC move, and if you look closely, you'll even see here a bit of liquidity. But this is for the next module when we're going to be discussing entries later. Yeah, I hope this is a good example of looking for liquidity in step 2, identifying potential action zones. All right, moving to the next chart. On here we got a chart of the euro yen, also a 4-hour chart. And let's assume that you've identified this as your impulsive wave down, which means you would have a bearish bias and you would be looking for potential action zones to go short. Now, looking at this chart, where would you mark off the liquidity? There's some clean highs over here, but if you do draw a line over here, you'll see that the market actually did spike these highs before dropping down. So this liquidity over here was already taken. There's some clean highs over here. Double tops should be on your list of potential areas that the market will reach for. So marking those 2 off, as you guys can see here, this was actually also a double top that was created a bit earlier on this chart, and the market spiked that before dropping down. So if we have a bearish bias after this impulse move and we're looking for potential action zones to short, then this is definitely going to be an area that you're going to mark off. As you guys can see, they're double tops, so you'll be sure there's a lot of orders resting over here, because every textbook tells you double tops, put your stops there and just short the market. Now, if you move forward and you anticipate a move to the upside, you can actually, you'll actually notice that this might even make an ABC correction there, a zigzag, as we discussed in the previous. So this is looking really good. If this was an impulse move, then we would have an ABC correction, and it would have to reach for this liquidity here. And as I told you, the point of corrections is so the market can refuel for a move in the same direction. So moving forward, as you guys can see, it actually just cleared these highs, and then we had the big move down. So yeah, this is also another good example of using liquidity for potential action zones, and we're going to be looking at a couple more. All right, USD Swiss franc 4-hour chart. If you just look at this chart and you've already identified your bias as being bullish after this big impulse move, now we're going to be looking for corrections so the market can move in the same direction. So there's actually a few levels of liquidity. There was a low here that was taken, but there could still be a bit of liquidity down here. But moving even down further, this is the next sort of level of liquidity, and marking that off and moving the chart forward. as you guys can see, the market came down slowly, reaching, and once it took that liquidity, it just took off. You can't see the rest of the chart, but this actually ended up going a little bit further. Again, after you've established your bias, look at these liquidity points and mark them off on your charts, and start noticing these on your charts in the next few weeks or months, and you'll definitely start looking at the market in a different way. All right, so another example here, the pound USD daily chart. This was actually a chart, if I'm not mistaken, of Brexit. And this was the big collapse, and then it had this running flat correction, and then it had another collapse ending in this massive spike down. And this could be a sign that the market is now actually running out of steam. When the market makes these sort of last gasp capitulation moves, these overextended moves, then the market normally has a bit of a retrace or a correction. But the market still, in these areas, it's very difficult to actually try and predict where these lows are going to be. And we're not going to be, when the market comes down as fast as this, we're not going to be trying to pick the bottoms, catch a falling knife, as they say, because you're going to hurt yourself in trading. We're going to sit back patiently. We're going to wait for the market to do its thing. If the market wants to turn around, it's still going to need to create the fuel or the liquidity for the move. And looking at the chart here, if you guys had to identify the liquidity, you can pause the video and try and look for it. But just looking at this chart, as I said, double bottoms are a great place for liquidity. So after this capitulation, the market made a low, and then started trending up a bit. So anyone who was, trying to catch this bottom or trying to go long would start placing orders over here. And again, this creates the liquidity for the market. So as you guys can see, there's those double bottoms that you need to be aware of. We'll mark them off, and the market actually then came down, reached for that liquidity. Bit of an impulse move, correction, and then after this, if you guys know the chart, it just started trending upwards. But again, after this big capitulation, the market did create the liquidity, and this happened over a few months actually. I mean, this was in October 2017 or 2016, and this reach was in January 2017, where it actually took that liquidity before it started moving up. So yeah, patience is key in Forex. Wait for the market to give you that sign or to set up for the setup, or to create the setup, and then you can start hunting those areas. So yes, this is another potential action zone based on liquidity. All right, our final example is example on gold. Now this is an 8-hour chart. I know 8-hour charts aren't really available on MetaTrader, but this is just going to be easier to view than a 4-hour daily chart. Now we had this big move down on gold that just kept on going down, and eventually it had this big capitulation again. And then, like I say, the market, when it has these big drops that ends in these massive spikes, the market is normally poised for a move up. But again, you're going to have to wait patiently for the market. It just doesn't turn around on a dime. All the institutions and stuff now, suddenly that's been short. They got to accumulate again. They got to create the liquidity for the move to turn around. And if you have a long bias on gold, let's assume your bias on gold would be long right now. Again, you would wait for this market to set up some sort of liquidity move, and then you would mark those off, and that would be your potential action zone where you're going to be hunting longs in the market. So yeah, the gold actually then for many days and weeks and it started making this consolidation as the market's getting ready for the next move. Identifying the clean low down here, that's definitely a potential action zone. The market already cleared these lows, so pretty much the next low would be this one. So, and if you guys, and this isn't a hindsight trade, guys. If you go into our Discord room to the gold channel and you scroll up, this is actually one that we did call on the trading room back then. And as you guys can see, the market cleared these lows. I believe it was 1180. 1180 was the level that we called. And then after the market took this liquidity, it just actually went up for weeks and weeks after that. But yeah, after the big drop down, market had many weeks where it created this consolidation, created all the liquidity down here. And like I say, you guys need to be aware of these things and mark them off as potential action zones. So yeah, and just a final note, as you guys can see, when we mark off liquidity, if it's untaken liquidity, we draw a red line and we mark it with an X. And once it's taken, we do a check sign. If you guys need more example of liquidity, we do have the liquidity run and liquidity channels in our Discord trading room under the concept channels. So we keep on adding charts in there, and we're building up a knowledge base. So again, just go there for reference if you guys need some more examples of liquidity in the market.